Hi, welcome to a brief video about an innovative loan program called the Homeownership Accelerator. My name is Chris George, and what you're about to see are real-life people talking about their stories of success on how this loan has helped them achieve their financial dreams. Why is this loan so different? Simply put, it is the first mortgage designed to help you pay off your debt quickly. When I got my first home loan, I knew I would never be able to pay it off. And today, with home appreciation, pensions, or Social Security, things that are not guaranteed, folks are looking for an alternative way to get to where they want to go. For decades, the mortgage industry has been focused on making customer payments affordable. That's nice, but how closer are we to actually owning our homes? What if there was an affordable loan program that would allow you to rapidly reduce your debt without changing any of your spending habits? It's not magic, it's math. Thousands of people from other countries have been using similar loan programs to pay off their debt. And now it's happening here in the United States.
When purchasing a home, most people focus on what their monthly payment is to make sure they can afford it. They're not looking at the overall cost of the loan, and a $250,000 loan could cost them hundreds of thousands of dollars in interest over 30 years.
I probably, to be honest with you, would have continued to go on the 15 to 30 year loan probably until I was dead. I probably never would have ever paid it off.
I had a 30-year mortgage. There was no way I was going to pay it off. I just always figured I would never have a house that I had actually paid off. That was something that your parents did, but people nowadays never pay a house off.
And the main concern from my point of view is I want to own my home, I want to pay it off as fast as I can, and I want to pay the least amount of interest.
The Homeownership Accelerator helps you by finding extra principal payments hidden in your own monthly cash flow. Think about your monthly cash flow. Each of us typically deposits the money we earn or receive into our checking account. It sits there for 30 days or longer while we get ready to pay bills or invest the money in our savings or retirement accounts. This pile of money is earning us next to nothing. Across from the pile is a hole that represents our mortgage debt. Once a month, when we make our house payment, we take a little bit of the pile and drop it in the hole. What if you could take the entire pile and move it into the hole, reducing your debt substantially? The Homeownership Accelerator does this by combining your checking account with your mortgage. What makes this loan so effective is that any deposit you make immediately reduces the balance on your mortgage and saves you interest, all the while giving you 24/7 access to your money. Once again, the Homeownership Accelerator simply allows you to use your money to reduce your mortgage debt, saving you thousands of dollars worth of interest. When you need to spend your money, you can, but while it's not being spent, it's working for you.
Without question, if you spend the exact same amount of money, you live your life exactly the same, your house is going to be paid off faster.
When the statement comes every month, the figure that I always look at is how much did we pay in interest? Because if I compare that with what we would be paying on interest on any other loan, it's drastically lower.
You set up the direct deposit, it goes automatically into your mortgage account. As soon as your check hits that account, it buys down the principal in your loan, whatever amount you happen to make that 2 weeks or that month or however you get paid.
I used to have my money all sit in a savings account, and at the end of the month I would pay out all my bills. Sitting in that saving account, it earns, 1%. So if I put all that money into this mortgage, I'm reducing my principal. I'm paying that much less interest each month.
We were one of the first businesses to sign up as a husband and wife ownership. We were able to take the revenues that we generated and put those directly onto the mortgage and leave them there for the entire month. Then the following month, when the bills are due, then I took out only that portion that I needed.
My husband and I have 5 rentals. We run our rental income through this mortgage, which then hits our principal reduction directly. That's not something that a 30-year mortgage could ever benefit from.
So if you're like me, and actually like most folks that you're seeing on this video, paying off your house seems like a complete impossibility. And yet with this very small change to the way you think about your money, suddenly it becomes a reality. Suddenly you can start thinking about the things that are important to you, which are different for everyone. Some people are focused on retirement. Some people are looking at ways to invest to build their retirement. Other people want the flexibility and the freedom to know that if something should happen and they need to pull money out of their house without having to go to the bank, they could have access to that money instantly without paying all the fees and costs associated with refinancing your house. It is as simple as changing a philosophy in the way you think about your money.
You always have access to the equity in your home. And so as you pay it down, your buying power increases, just as it would in a conventional loan. The only difference is you'd have to go out and get another home equity line of credit, or you'd have to refinance, get a second mortgage to pull money out. You don't have to do that in this.
I will say, I spend a lot of time looking at this loan and figuring out what it's doing. It's fascinating to me because it's my money and I get to do with it what I want, and it's like being my own banker.
The overall effect on my loan has been that I've decreased the whole principal by $35,000 in 7 months.
I think I'm in the position now of approximately 8 or 9 years, and I'll have it completely paid for.
I plugged in all those numbers, and in the very best case scenario, I found we could own our home in 7 years.
I work for a large company, and if I ever get laid off, we don't have to worry about a house payment for quite some time, so it gives you peace of mind.
For me, it was just a far-off goal to ever be able to own a home free and clear. And with this accelerated loan, it has made it possible for me to know that within 7 to 8 years, I will own my home free and clear.
You've seen the success of other people throughout this video. So now, what's the first step for you to have that kind of success? I urge you to contact the certified loan officer on the video that was sent to you. He or she will walk you through a personalized assessment of your situation.
Housing is one of the biggest costs that I think that I will have when I retire, and this is going to eliminate that.
Seeing that balance come down day after day after day, and then finally hit zero and start popping up the other side, and then to get an interest statement saying, hey, you've earned money now, it's like, oh my gosh, it's Christmas every day.
The fact is, I don't care if you make $40,000 or you make $140,000. You're gonna pay your house off faster if you work this program.
Have you ever wondered what it would be like to have your house paid off and not have a mortgage payment? Find out now. What do you have to lose but years off your mortgage?